So sir, can you quickly revise then once what it is, how to treat or what overhead accounting is? See, overheads means all the indirect expenses, basically indirect material, indirect labor and indirect expense. Together we call it as a overhead. As we can't directly charge it to the cost object, or we are going to do is we are going to absorb it, which means we are going to add it somehow. Because your cost object will be having only prime cost, right? Only direct material, direct labor and direct expense will be there. Direct material, direct expense, direct labor will be there, right? So what we are going to do, sir, we are going to add this overhead also to the cost objects, units produced in simple. Sir, how we are going to add? We are going to add it using the absorption, using the concept called absorption. Sir, so absorption, what we need to find out how much is the absorption and all thing we need is, we need how much is the overhead for the particular production things. So how to do it, sir? First we are going to collect the data relating to overhead. Whatever the amount we have spent to the indirect items, we are going to collect it. Later what we are going to do, sir, we are going to classify it on different basis. For example, on the basis of elements, it can be classified into indirect material, indirect labor and indirect expense. On the basis of function, we can classify into factory overhead, administration overhead, selling and distribution overhead, research and development overhead. On the basis of behavior, on the basis of variability, we can call it as a fixed overhead, variable overhead, semi-variable overhead. On the basis of your controllability, we can call it as a controllable overhead, non-controllable overhead. Controllable overhead and non-controllable overhead. Okay, sir. Okay. So we have collected, we have classified. Next step is what? Next step is codification. Codification is nothing but to easily identify, we are going to give them separate codes. Factory overhead starts with F. Okay, factory overhead starts with F and the item number, if it's a material, it is 001. If it's a labor, 002. Like that, some codification we are going to give for the better controllability of the overhead. That is codification. Okay, sir. After codification, what we do, sir? Here the big thing comes. Till now, in your question, all the things will be there. Whatever we have discussed now, till here, all the things will be there in the question straight away, right? So later what we are going to do is, we are going to apportion, we are going to reapportion. We are going to apportion, reapportion. In between there is something called as allotment also. Sir, what do you mean by allotment, sir? Simple. Allotment means some indirect expense will be direct to departments. For example, sir, marketing manager salary. Marketing manager salary, whether it is direct expense or indirect expense, sir, the answer is indirect expense. Marketing manager salary, the answer is indirect expense. Okay, sir, indirect expense we agreed. Indirect expense we agreed. So, sir, is it related to all the departments, or due to it is relating to different departments? The answer is big no. It is only relating to selling and distribution department. In simple, if there is any department called marketing department, then this expense is only related to that particular marketing department. So when you are going to add the whole amount to the marketing department, when you are going to add the whole expense into the marketing department, that process is called as allocation. That process is called as allocation. Okay, sir. What location, sir? Allocation. Okay. Next, there are certain common expenditure. Will be relevant for the different departments. There are, for different general expense will be there, which will be relevant for a different department. For example, let's say there are 5 departments, 3 production department, 2 service department in a floor, in a factory or in a organization building. There are 5 departments, 3 production related department, 2 service related department. 3 production related, 2 service related. So what we are going to do, sir? Simple. Let's say rent is there. Whether are we going to pay only so much rent separately? The answer is no. What we are going to do, for the whole building we are going to pay rent at a time, right? For the whole building we are going to pay rent at the time. Sir, is it relating to only the production department or only to the service department? The answer is no. It is relevant for all the 5 departments, as all the 5 departments are using the space. It is relevant for all the 5 departments, as all the 5 departments are using the floor, right, or the space. So we are going to, on some equitable basis, we are going to apportion it. We are going to apportion it. That thing is called as apportionment. That is, we are going to divide it and add it to the cost of such department. We are going to divide it and add it to the cost of such department. That thing is called as allocation. That is, sorry, apportionment. That is, there will be an expense which is general in nature, of course indirect only because we are discussing about overheads, which is general in nature. That would be divided and added to the cost of different departments on some equitable basis. That some equitable basis may what we will divide and put, that whole process is called as apportionment. Okay, sir. One more thing we should keep in mind. Our service departments will be there, no? Our service department, which is just providing a ancillary service to the production department, which is a backup for our production department, which is doing the back end work for our production department. For example, production department, sir. Production department mein laborers are there, employees are there. For them, food is required. Our plant is somewhere inside forest. Not now, plant means don't take that green plant. Plant means production plant. Our production plant is somewhere in between the forest. Okay. Now our employees should go there, 20 kilometers traveling from the town, go to that forest, work and come back. In between, for them food, what they should do? Should they come to the town, have food and go? In that time, whole day will go. That's why we have their canteen. Canteen is there. So now canteen work is what, sir? Whether it is directly related to the production, the answer is no. A big no. It has nothing to do with the production, right? But are they supporting the production plants? The answer is yes. How, sir? They are providing the food to the employees. Food to the employees of the factory. So now the thing is, sir, can we charge it to the units? The answer is big no. Can we charge directly the service department related expense to the final product, sir? The answer is big no. Why? Because it doesn't vary with the units produced. Because service department thing, it doesn't vary with the unit produced. That's why what we are going to do, sir, this service department, again we are going to charge it to the production department. Through the apportionment and allocation, we got some expense to the service departments. No, as service departments are not producing anything, we cannot charge it to the final product. So what we are going to do, we are going to charge this service department things again to the production department. That thing is called as reapportionment. Service department, certain overhead we will get, no. As we cannot charge it directly to the final product, we are going to charge it to the production team or a production department. From production department, we can charge it to the final product. No, that's why we are going to charge it to the production department. The process of charging the overheads of the service department to the production department is known as reapportionment, sir. Wait, give me a second. Let me show if there is any chart there or something. See here, the whole process is there here. So overhead only relating to certain department, it is general. If it is only relating to certain department, we are going to allocate it to the certain department. In our example, P1, P2, P3 means production departments, S1, S2 means service departments. As one expense is there which is directly relating to P1, that we have allocated it to P1. Whereas general expense, it is relating to all the departments that we have apportioned it to the each department. Now service department overhead is there, no, after apportionment service department overhead. As we cannot recover it from the final product, what we are going to do is that overhead we are going to charge it back to our production department on some basis. That is usually based on the service received by those production departments. So that process of transferring the overhead of the service departments to the production department is called as reapportionment, sir. After reapportionment, we will get to know how much is the cost of each, or how much is the indirect cost, or how much is the overheads of the each production department, that we are going to absorb, or that we are going to recover it from the final cost object or a final unit. That thing is called as absorption. That thing is called as absorption. Now the question comes, sir, how you can reapportion it? How you can reapportion it, or a secondary distribution? Basically, we have three methods, sir. Basically, we have three methods. So, sir, in question they will give which method to use. The answer is no. There is no need also. Why? Because we should analyze the situation and we should come up with the method. How, sir? Listen. First method is a direct redistribution method, or also called as direct distribution method. This is applied when no service department is providing service to the other department. I repeat, this is applied when no service department is providing service to the other department. In the given case, see here, S1 and S2 is there, no? They are not providing service in between them. They are all providing service to P1, P2, P3. S1 is also providing service to P1, P2, P3. S2 is also providing service to P1, P2, P3. S2 is not providing service to S1. S1 is not providing service to S2. Which means accounting team is not providing service to HR team. HR team is not providing service to accounting team. But both of them are providing service to the production team. In this situation, straight away we are going to charge S1 and S2 expenses to the P1, P2, P3. Straight away we are going to charge S1 and S2 expense to the P1, P2, P3 in the given ratio, in the given percentage. That thing is called as direct redistribution method or direct distribution method. Direct distribution or redistribution method. Next is step method or non-reciprocal method. Step method or non-reciprocal method. This is used when one service department provides service to the other service department and production department, but other service department is there, no, that is providing service only to the production department. For example here S1 is providing service to the S2 and P1, P2, P3, whereas S2 is providing service to the only P1, P2, P3. In this kind of situation, we will go for the step method. We will go for the step method, also called as non-reciprocal method. Non-reciprocal method. Step method or non-reciprocal method. I repeat, where one service is providing service to all the department, including a service department. The other service department is not providing service to the service department, but only providing service to the production department. In this, what we should do, sir? First we should take S1. And in S1 what we are going to do is, we are going to allocate it or apportion it to the different departments P1, P2, P3, S2. I repeat, P1, P2, P3 and S2. Later S2 we already had some overhead from the primary distribution. Add the redistributed or the secondary distribution, so we'll get some amount that you are going to charge it to P1, P2, P3 only. P1, P2, P3 only, because that is only relevant for the P1, P2, P3. This is how the step method works. That is, when you compute this, the answer will come like this, stepwise. That is it called as step method. Okay, sir. Sir, what if S1 is providing service to P1, P2, P3 and S2. S2 is providing service to P1, P2, P3, S1. Which means service departments, both the service department providing service to both production and service. In that case, we use the reciprocal method. In that case, we are going to use the reciprocal method, sir. Reciprocal method. So reciprocal methods are three kind: simultaneous equation method, trial and error method, repeated distribution method. Simultaneous equation method, trial and error method, repeated distribution method. Repeated distribution method, what we are going to do, sir, until some service department comes to 0, we are going to apportion it over and again. Okay, so that is repeated distribution method. Until some service department overhead comes to 0 or decimals, we are going to charge it to the different production department and service department. That is called your repeated distribution method. Simultaneous equation method, sir, we are going to write down the equation. I will show here. See here they are telling boiler house is there, no? Boiler house. Actually 3 lakh is incurred. Also pump house is providing 50% service to the boiler house. So don't you think 50% of the pump room expense also should be included in the boiler house? The answer is yes. Go to the pump room. There we incurred 60,000 directly to the pump room. That is primary distribution. Also boiler house 5% is included in the pump room. So we'll write that and we'll solve the equation and we'll find out how much is the amount. That amount will be applied in percentage basis. I repeat, in percentage basis to the production departments. Always remember in reciprocal method, use percentages, not the ratios. Why it is? In full depth I have already explained. As it's revision, I am not going to explain it. So much you remember. Step method and your direct method, you can use the ratios, but not to the reciprocal methods. Here use the percentages. So many things we have learned. Now with this second step, what we did, that is allocation, apportionment and reapportionment. Right now what is there, sir? In each production department we have a cost. Now this cost should be added to the cost of the cost objects, no? Or should be added to the cost of the final products, no? That process is called as absorption. That process is called as absorption. So if you see here, there are information relating to capacity and overhead. Different capacities are there, which we are going to use it for the overhead rate computation, sir. We are going to use the normal capacity. So see here overhead we allotted and apportioned to the various service department and various production department. From service department again we reapportioned it. Now the production department, when we add it to the cost of the cost object, that process is called as absorbed or absorption. That is, assigning or charging or recovering from the cost object is called as absorption. Now the question comes, sir, how to find out the absorption rate? Simple. Let's say there is a machinery department in the production department, or machine A. Now this machine A used for 10,000 hours, and the cost of machine is overhead of that particular machine A department is rupees 1 lakh. Now rupees 1 lakh divided by 10,000, which will come to rupees 10 per hour. If any particular unit is using 10 hours of machine A, we are going to absorb rupees 10 into 10 hours, 100 rupees to that particular thing. That is called as overhead absorption rate. Okay. Sir, how many overhead absorption rate are there, sir? 4 overhead absorption rates are there. One is actual rate. Here we are going to consider the actual overhead divided by actual base. It can be machine hour, it can be laborer, it can be number of units produced, it can be direct wages, direct material, whatever it is, base. Depending from question to question, the base changes. So actual overhead rate, how we are going to find out, sir? Actual overhead for the period divided by actual value or a quantity of a base for the period. Sir, is there any demerit in this? The answer is big yes. What, sir? To find out actual overhead, we should wait till the period gets completed, no? To find out the actual overhead, we need to wait till that particular period gets completed. In between, if you sell anything, how you are going to charge it to that, right? That's why we have one more method called predetermined overhead rate method. Predetermined overhead rate method. Here what we are going to do, sir? Here we are going to estimate in a earlier prior hand itself, budgeted overheads. So we are going to find out budgeted overhead divided by budgeted rates. budgeted overheads divided by budgeted rates. Here we are going to get some predetermined rates, that is before starting the production only. One more method is there, that is blanket or a single overhead rate. Here we are not going to departmentalize and all. We are not going to call production department A, B, C and all. What we are going to do is whole factory overhead will be divided by some quantity or some base of the factory, and we are going to charge it to the final product. That is blanket rate. If the factory overhead divided into different departments and all, or a different cost center and all, then that rate what we compute, that is called as multiple rate. Okay, sir. Done. So how we are going to apportion the overhead? Different methods are there. Production unit method. Here we are simple. Total overhead we will take. How many units produced we will take. We will get per unit how much it is. And we are going to charge it to the units produced or unit relating to that particular job. Percentage of direct wages. That is nothing but total overhead divided by direct wages. We will get some percentage. So if the job A is using let's say 100 rupees, or overall our factory is using 1 lakh direct wages and 2 lakh overheads, which means our overhead is 200% of direct wages, right? Overhead is 200% of direct wages. Now there is one job which is using 10,000 rupees ka direct wages. In that case, my overhead is nothing but 10,000 into 200%, which will come to 20,000, right? Next we have percentage of direct method. Here what we are going to do, sir, percentage of direct method, instead of direct labor, it will be direct method. Next, percentage of prime cost, total overhead divided by prime cost into 100. Next, we have direct labor and machine hour rate. These are the one which is usually used, right? So direct labor are what we are going to do, sir. Labor are used in that particular production plant. For example, production plant A is there. In that overhead is coming to 10 lakh. We used 1 lakh labor hours. So per labor hour it is rupees 10. Per labor hour rupees 10. Now in this period or in this particular job, we need let's say 2000 labor hours. So the overhead to be charged to that particular job is 2000 into rupees 10, which will come to 20,000. That's simple. Machine hour rate, we have two kind of machine hour rate: ordinary machine hour rate, composite machine hour rate. When you are going to take the overheads only relating to that particular machine, I repeat, when you are going to take the expenses only relating to that particular machine, then it is called as a ordinary machine hour rate. When you are going to take the all overheads while computing the machine hour rate, that is called as a composite machine hour rate. Now the question comes, sir, there is something called under or over absorption. Under or over absorption. That is simple. See here, something we learned called predetermined rate and actual rate. Actual rate is nothing but we are going to take the actual one. Let us say predetermined rate. According to predetermined rate, rupees 10 is coming as a overhead. Rupees 10 per hour is a overhead. According to predetermined rate, rupees 10 per hour is a overhead. Now what is happening, you know? Let's say actual overhead. What you are spending is rupees 1 lakh. Actual overhead what you are spending is rupees 1 lakh. But absorbed is how much, you know? Absorbed means, let's say you produce 9,000 hours. So 9,000 hours into 10. How much it will be, sir? 90,000. I will write here. Listen, very important. Predetermined rate. Predetermined rate, that is based on a budget, is rupees 10 per hour. Predetermined rate is rupees 10 per hour. Actual overhead, that is how much we spent. Let's say that is rupees 10 lakh. Now hours worked, let's say 90,000 hours. So how we are going to absorb, sir? We are going to absorb on the basis of the number of hours worked using the predetermined rate. No. So how much will be the absorbed overhead? Simple. 90,000 hours we have worked. Per hour we are telling the overhead rate is rupees 10, which will come to rupees 9 lakh. We absorbed rupees 9 lakh, but actually is rupees 10 lakh, which means we are yet to recover more, right? We should recover more, which means when the actual overhead is more than the absorbed overhead, then that situation is called as under absorption. Our recovery is less, we recovered less, under recovery, under absorption. Whereas our actual is less, but what we recovered is huge, then or more. In that case, that difference is called as over absorption. That case is called as over absorption. And always remember one thing in mind: under absorption or over absorption concept will come when you have ascertained your overhead rate. When you have ascertained your overhead rate on the budgeted basis. I repeat, concept of underhead and over absorption will come. Under absorption or over absorption will come only when you ascertained your overhead rate, using predetermined rate. Otherwise, actual minus actual, what deviation we will get? Nothing. Actual minus actual, what deviation we will get? Nothing. So only at the time of predetermined rates, under or over absorption, things will come. Okay, sir. So actual overhead is greater than the absorbed overhead. We call that situation as under absorption. Actual overhead is less than the absorbed overhead. We call that situation as the over absorption. Sir, how to treat it in the books? How to treat it in the cost accounts? We have three methods, sir. We have three methods. First method is we are going to write off if it's under absorption, or write it back if it's a over absorption to the costing P&L straight away. If it's a under absorption, which means expense charged is less. Expense charged is less in the books. So we have to charge more expense, right? We have to charge more expense. So we are going to add it as an expense in our costing P&L. If it's a over recovery, expense incurred is less, but already we charge in the books is more, which means we should reduce our expense from our costing P&L. That's what we do in the method number 1. Method number 2 is Bakwas method, which is not recommended by any cost accounting standard. That is carrying forward straight away by putting it to some reserve account. Let's say absorption difference reserve account, and carrying forward to the next years, and there we are adjusting. Usually we are not going to use this method. Third method is very important method, supplementary rate method. Here what we are going to do, sir, we are going to find out how much is the under absorption or over absorption. For that, again we are going to find out per hour how much it is. Per hour how much is under absorption or over absorption, or per unit how much it is under absorption or over absorption. This thing you keep in mind. When it is divided by unit, no, when you are using unit based method, that time unit should be equivalent unit. Sometimes what happens, they will tell sold units 10,000, finished goods in stock 2,000, WIP they will tell WIP 60%, let's say 6,000, right? Let's say 6,000. Now under absorption how much, sir? Under absorption, let's say rupees 20,000 is under absorption. Now supplementary rate, how you are going to calculate, sir? Supplementary rate I am going to calculate. See, 10,000 finished 100%, 2,000 100%, but the 60% is not 100%. Now I have to find out a equivalent units. That is 60,000 means 60%. If it's a 100%, how much it would be, right? How much it would be? Basically it will come to 1,000 units, right? Basically it will come to 1,000 units. So my equivalent units for this is basically 13,000 units, not 18,000 units. So 20,000 divided by 13,000 I will get, and I will do the math over here, right? Then supplementary rate I am going to multiply it to the cost of sales relating to sold units. finished goods and WIP. Cost of sales relating to sold units, finished goods and WIP, and accordingly the cost of sales will be charged to the costing P&L. These two things will be left in the closing stock. These two things will be left in the closing stock. This is the supplementary method which we use in almost all the time. Sometimes what happens, certain overheads under or over is relating to abnormal causes. Let's say this 20,000 what is under absorbed, in this rupees 6,000 is abnormal. In that case, what we are going to do is, before finding out a supplementary, we are going to divide this 20,000 into 6,000 and 14,000. 6,000 and 14,000. This 6,000 we are going to charge it to the costing P&L straight away. 6,000 we will charge it to the costing P&L. This 14,000 what we are going to do, sir, this 14,000, for this we are going to find out a supplementary rate. And we are going to add it or reduce it from the cost of the goods sold, or cost of the finished goods in stock, or cost of the WIP in stock. Sir, for raw material it won't come. Raw material, what overhead will be there? It is not yet went to the factory. It is still in a go down. Raw material is still in a go down. The overhead won't come. Okay, sir. Finish. Sometimes yes, go down rent and all might come. But usually we don't take it. Yes, sir. Finish. This is all about your overheads. Nothing. All you have to remember is the process. What is allocation? What is apportionment? Okay, after doing that, why we will reapportion it? After reapportioning, we should absorb. What are the different methods of absorption? What if there is a over absorption? What if there is a under absorption? Only so much. We will think that our overhead chapter is like big thing. No, it is very small thing. You should understand what it is. Right? Chalo. Here we revised our overheads.